Short exercise 7-6, cash receipts journal. So we are going to enter these transactions into the cash receipts journal. So the cash receipts journal is only used for transactions where we receive cash. Use the following cash receipts journal to record the transactions. So we already have these transactions open down below. If an input field is not used in the journal, leave the field empty. Do not select any information and do not enter a 0. Abbreviations used are DISC for discounts, REC for receivables, REV for revenue, accounts for accounts, inventory, I and B right there. So let's take a look at our first transaction here on July 5th. And again, I like to use this table to block off each row as we go. So on July 5th, so we sold merchandise inventory for cash of $2,200. The cost of those goods was $2,100. So let's start by entering the date. So we have July 5th. And then notice cash is being debited, and that makes sense because a debit to cash means it is going up, which makes sense for cash receipts journal. Remember, we're only using this journal when we receive cash. So each of these will have this cash DR or debit. So we sold merchandise inventory for that cash of $2,200. So we know our cash is going up by $2,200. Then we're going to need a credit account. So according to this, we made a sales. That means our sales revenue is going up by $2,200, and that is a credit to sales. And then now at this point, a lot of students say, well, our debits equal our credits, so we must be finished right. Well, no, we sold something, so we have to have cost of goods sold going up and inventory going down, which is this column here at the end. So that cost of goods sold for $2,100. So that is what those goods, that merchandise inventory, cost us that we sold. Now moving on to our next transaction. On July 12th, we collected interest revenue of $2,350. So we'll input that date here on July 12th. Then if we take a look on our right here, do we have an interest revenue account to credit? We do not. So we're going to put the interest revenue credited right here. So we have interest revenue, and then we have other accounts credit for $2,350. So we know our cash is also going to be debited for that same amount, since again, this is the cash receipts journal, and we are collecting that revenue here in cash. All right, so then we have our next transaction on July 18th. We received cash from Thai Nguyen for $1,100 on account. There was no discount. So we'll get our date in first. So that was July 18th. So again, why is Thai paying us this? Well, here's the two keywords. It's on account. So Thai is paying us, or paying off AR that she owes us. So we can first start by getting that $1,100 in the cash here as a debit. So we know we are receiving cash. And then the other account that we are going to credit is the AR, the accounts receivable, since that's now lowering since she is paying that off. And again, now we see our debits equal our credits. So a lot of students at this point will say, well, we must be done. However, we still have to tell the readers of the journal who this AR was for. So this was for Thai Nguyen in the account credited column. So later, when we would go to post this to the AR subledger for Thai, we would know it's for her. Okay, so now lastly, we have July 29th. We received $5,400 from Quinn Doris in full settlement of its accounts receivable. Doris earned a $25 or $75 discount by paying early. So rearrange there real quick. So we have to get our date. So we have the 29th. And just like with Thai here, we are getting this AR paid off. So we can start by inputting the account credited so we don't forget it. We have Quinn Doris who's paying off that accounts receivable. So we received $5,400, so that's a cash debit. But then we have to pay attention to the wording here. It says in full settlement of her AR, and then because she received the $75 discount, and remember with sales discounts, they go up with a debit. So that's going to be $75 here with a debit. But then notice cash is also a debit. So then our credit is going to be a combination of these. So that's $5,475. And what account will that be credited to? It's going to be to that accounts receivable, just like with that. So that is going to be for $5,475 to pay off that accounts receivable balance with that discount and cash. So now our debits equal our credits. So let's go ahead and minimize this and check our answer. Excellent. All right, so in the next problem, what we're going to do is we're going to take the same cash receipts journal and we will post all of this information to the ledger and then the AR sub ledger.